Welcome to the Daily Update, where I'll go over the action in the market for Friday, October 20th, and then we'll see how things look for Monday, October 23rd. We had a pretty significant down day. We're right a little bit below the 200-day simple moving average. We're kind of at that point now where are we going to break lower and really test even further down support? Our technicals are turning more negative, but at the same time, we are at a pretty significant level of support. We could bounce up off of that, but we need to see follow through based on price action. Pretty much all of our indicators now, we're seeing some indications in the short term that we're a little bit extended to the downside. We're not really seeing anything in the intermediate term, which could suggest that there's more room to fall. We're probably coming into that period of seasonality right now where things are tending to turn more negative until we bottom out and see a little bit more positive seasonality going into the latter part of October. All right, right at the open, we had a lower open and prices fell down below S1 at 42.52. They tried to bounce up off of that, but we rebounded and got above S1. Then we fell down below S2 at 42.26. We ended up closing down below S2 and a little bit below the 200-day simple moving average. That's a big deal. That's going to show up not only on the daily charts, it's going to affect the weekly charts. A lot of people that make their decisions over the weekend are going to see this and go, oh my gosh, and they might end up reacting to that over the weekend. We'll have to see. This is being pretty much blamed on geopolitical events, things going on in Israel, people wanting to get out of positions before the weekend in case things do escalate because they won't have a chance to react until Monday's session. So we were down 1.26% on above average volume. Now, it was also options expiration. That could also be feeding into a lot of the average or a lot of the volume that we're seeing right now. We are turning negative, and it's about what's going on in Israel. That's turning our technicals more negative. And also what's influencing the market is even though interest rates were down on Friday and the dollar was down, they really shot up earlier in the session. That spooked out stocks. And then as interest rates were coming down, stocks still decided to remain freaked out, mainly for geopolitical reasons. Some comments. There's a fear that things will escalate in Israel. This is what prompted a lot of selling ahead of the weekend. Bank stocks were weak after some smaller companies or smaller banks came out with disappointing earnings. Oil was down just a little bit. It closed at 88.38, but it's still higher than where some people in the market are feeling comfortable with that. The S&P did close below its 200-day simple moving average, and there are millions of people who are seeing that right now and wondering what are they going to do about it. Microchips, the micro caps are setting yet another 52-week low. We're seeing continued weakness in the small caps, the mid caps, and even in the micro caps. On a short-term basis, we still have a bit of a list now that's being developed. We have the Connors RSI, which you could say is a short-term indicator. We could also say it's a more of an intermediate-term indicator. Our 20-period exponential moving average study, the Williams percent R, the CCI 14 and 20, our stochastics chart, and then our short-term boom indicator is also giving us an extreme negative reading. And these could still fall further from where they're at right now. We have the 50-period exponential moving average study. That's our only intermediate term chart that's giving any kind of indication that we've gone down too far too fast. And we even have our 150-period moving average study. That's our long-term chart. So we'll have to see how things go from here. We're still working with this scenario, but we have this big variable with the geopolitical events that are going on. The idea is that the economy is still strong. It's stronger than what the market was hoping for, and that the Fed will keep rates higher for longer and possibly even raise interest rates. We're still waiting for some data out of China to see if their economy is improving. That can take some while since they're adding stimulus over there. Of course, everything going on in Israel. We're watching the price of oil and then earnings. They can be either positive or negative on things. The dollar was down and interest rates were down, which should have given some support to stocks, but they just didn't do that on Friday. We have two of our yield curves, the 30 to the 5 and the 10 to the 5, that are back to being normal, where the important ones, the 10 to the 2-year and the 10 to the 3-month, they remain inverted, even though they're showing some improvement. And I'll be going over that in the intermarket analysis video, as well as the deep dive video, to actually show you charts of those yield curves. Sentiment is negative. We're down at 26. We're not extreme yet. If we go to 25 or below, that's when we start to get extreme fearful, or we drop down from being at 28. This is what we're seeing start to develop. We're still not in a solid definition of a trend right now, but the ADX is coming above its moving average. So that could be the beginning of a new trend. The red line's on top, so it's negative. Both the moving average and the ADX, they're still below 20, but they are starting to show some strength. Our bias is negative and our momentum is now negative as well. The economic, we didn't really get anything. There was the Treasury budget, but they didn't even post that at briefing.com, so I'm not going to bring that up here. We ended up settling down a little bit with the 10-year yield at 4.92%. That's still above the 4.02%, which is what the market fears is putting a pressure on earnings in companies and not necessarily justifying higher prices. Here's the intraday chart where we didn't really gap all that much. We did have a lower open, and then we came down to S1. We just kept right on going, and we came down to the 200-day simple moving average, which right now is at 42.33. Remember, moving averages adjust every day. So back when we were hitting it a few weeks ago or getting close, the moving average was a lot lower. Well, it's going up, and that's still positive, but it recalculates with each passing day. This did try to act as some kind of support. We bounced up off of that a little bit. We even got a little bit above S1, but then we fell down going into the close, and we ended up closing down below S2 and below the 200-day simple moving average. We're also seeing pretty much across the board weakness with growth and value. We're seeing that here with our ratio, where we've been seeing that for the last few days, where growth has not been outperforming value. It showed a few signs of hope there along the way, but you can see we look at this in the longer term, even though this is an intraday chart, where growth was outperforming value. Now we're starting to see more of a trend down where value was outperforming growth. But on an end of day basis, we're still hanging in there. We did turn down with our ratio with the S&P, but we're still coming from a breakout point here. That's somewhat positive. Here's the condition of our trend. We're starting to turn up. We're still below 20. It's crossing the moving average. The red line is on top. So a new trend appears to be developing. And right now that trend is negative. Here's the short-term chart. Above the moving average, still below 20. Red line is on top. Now we're coming up to this point where the VIX should have topped out by now and we might be going down. Who knows? Are we coming into this other part where the VIX starts to bounce back up? Did we already top out with the VIX? But overall, we should be seeing on a historical basis, the VIX continue to decline, but it's actually going up quite fast right now. The Ulcer Index is starting to show that there's an increase in fear, but we're still below the moving average. Here is the VIX, where we shot above 20. That's pretty significant on a closing basis, and we closed pretty much at the high on the bar chart. So this is just showing that there's a lot more fear in the market. We're also showing the volatility is really picking up. It's spiking both on the line chart as well as the bar chart, even though it closed down just a little bit on a closing basis. We're also looking more negative. When we look at the VIX to VVIX ratio, it's continuing to go up. And we've turned back up again with our 5-period moving average of the equity put call ratio. It's starting to go back up after giving us an extreme reading. We're wondering, as this keeps going up, that is usually negative for the market. Are we going to be able to top out at some point and finally hit a bottom? The longer-term equity put call ratio is still continuing to go up. That's also negative. This fear gauge continues to climb higher, showing there's more fear. The VIX to move ratio is also really starting to go back up, showing there's a lot of fear in stocks. And then this, I usually just show in the deep dive video, but this is the VIX, and then we do a ratio with the 3-month average of the VIX, where it's been climbing. I mainly follow the red line here, and it's continuing to show that there's an increase in fear. The ratio between risk on and risk off is really starting to fall and turning more into a real downtrend right now. That's negative. The mass index, we're wondering, are we going to get some kind of a signal here? We've crossed above the red dash line. We're heading to the blue line. When we come back down and cross the red dash line again, that will be when a signal is generated. And this indicator tries to suggest that there will be a reversal of whatever is going on at the time the signal is generated. that we're going to turn around and go in the other direction, but we're not there yet with this chart. Looking at the advanced decline line, we've dropped below the moving average based on price, and we're showing even more weakness based on volume. We're showing a real expansion of the new lows and almost no new highs. So now our 5 period is starting to roll over. It's not quite negative yet, and we're starting to flatten out, even though we're still increasing with our 10 period, but this is showing weakness. We're dropping below the midpoint with our advanced decline ratio, both with the blue line and the red line. That's negative. Accumulation distribution. This is what we were watching for, and it was giving us some hope. We were above the red line. Now we've dropped below the red line, suggesting that the smart money is selling. Also, the Chaikin money flow. It's still positive, but it's starting to come down after it had been giving us a pretty good solid upward move. And we're well below the longer-term trend line here, and we're right down to the red line. We're a little bit below that, which is the 200-day simple moving average. On the bottom, because it was options expiration, because people were really selling, we did see a pickup in volume. But notice that we're kind of right back down to where we were at before. Yeah, the moving average has come up, and we're hitting that, but we haven't broke below this previous support. Is that going to hold, or are we going to continue to fall through that? We did see a real pickup in volume, and our average volume is also increasing. The 20-period exponential moving average, just barely starting to get extreme negative. It has more room to fall from here, as does the 50-period exponential moving average. And the 200-day exponential moving average is declining and below the midpoint and not extreme. The Williams percent R is already shot down. And just a few days ago, it was extreme positive. Now it's already gone down to being extreme negative. The CCI 14, just barely getting into an extreme negative reading, as well as the CCI 20. These are our shorter term indicators. The short term boom indicator based on 20 periods, we're starting to come down to this 100 level, which a lot of times that means that we've gone down pretty far, pretty fast, but we could also fall more than this. We're looking more negative with the 50 period since we're below zero, and we're starting to decline below zero with the 200 period moving average study. And the force index, it's starting to get extreme where we came down and we're hitting this lower Keltner band, which is very similar to a Bollinger band. The stochastics in the short term are already extreme negative. We're looking more negative now in the intermediate term, and we're turning down in the long term. And we're showing a real falling apart, so to speak, with the cumulative NYSE advanced decline line. We're starting to break to new lows. We're starting to break below this previous low spot with our regular advanced decline line. Will we come down to this other level and find some support there? The Swenlin trading oscillator based on price and volume is now negative. We've crossed below zero with both. The go, no-go system remains deep purple. That's negative. The TTM squeeze, after really going up, even though we were chopping around, it was looking more positive. Now it's starting to roll over, and it's turning to the darker shade of blue. That means it's more negative. The balance of power, still above the dashed line, but has been showing some weakness. And we're getting down to the bottom here with our highest high and lowest low values. We're wondering, is this previous support going to hold for the market? The Connors RSI, we don't get a lot of signals here, but we're just barely starting to get extreme negative. This works just like a regular RSI. And we're dropping ever so slightly below the 200-day simple moving average. We haven't done that since last March. Now, we were able to recover last March. Are we going to be able to do that this time, or are things going to turn even more negative? The vortex, which just recently crossed over and gave us a buy signal, is now crossing over and giving a sell signal. The ease of movement, which had been above zero, is declining and is now dropping below zero. That's negative. And the bullish percent index, which gave us a buy signal once we crossed back above 30 and was looking a lot better. Now it's starting to show weakness. And then this also measures a lot of weakness going on inside of the S&P 500. So we're turning down now with the summation index based on price and volume. That's negative. We're starting to turn down as well with the NYSE summation index based on price and volume. We continue to be negative with the Elder's impulse system. And notice how we're coming right back down to this previous lows. Is that going to matter to the market? Are we going to be able to bounce up off of that or end up breaking through it? The RSI based on 14 and 9 periods are looking more negative. They're below 50 and declining and not extreme, at least yet. The on-balance volume continues to fall further below the moving average, and the red line is now declining. The 200-day simple moving average study, we broke below these previous low levels. And right now it looks like we're kind of in free fall unless we can find some support. We're also seeing follow through weakness here with the 50-period moving average study. We're well below the 100% retracement level on this fib chart. If we continue to fall, I'll probably extend this line over, looking at this shorter term fib level will actually provide some kind of support. Longer term, we're below the 61.8% retracement level. Are we going to find some support here or continue down to the 50% retracement level? Then this is longer term. We're coming down. We're just 10 points away from this double fib line right here. If the market's going to make a stand, it's going to have to do it right around this level if things are going to go back to being more positive later on. And we're also coming down, not real close, but the quadrant level here, we're coming back down to this previous low. When we get to this level, we want to be watching to see if it stays above this red line. The Copic curve had been generating a buy signal, but now it's starting to roll over. The Pring bottom fisher is just happily going along saying that, hey, maybe we've reached the bottom here. Well, we need to see some confirmation of that first. The PMO study that we look at, we're declining with the PMOs that are rising. We're going down with the buy signals. We're also starting to decline with the PMOs that are above zero. And on a momentum basis, we're starting to switch over negative. The PMO is crossing below its moving average. We haven't quite crossed yet based on price and volume, but they're showing weakness. The NYSE bullish percent index is now going down. That's negative. It's also below 50. The NASDAQ 100 bullish percent index. This is where a lot of the strength in 2023 has come from. Right now, this is giving us some weakness. The slope oscillator rolling over, but has not crossed positive yet. The MACD is closer to actually crossing over its moving average. So looking at all of our oscillators, in the short term, we're rolling over and could go negative. Intermediate term, we're also getting down to the moving averages. We're still looking okay with our longer term oscillators. And looking at our moving average tree, we're just a little bit below the 200-day simple moving average. That's a real line in the sand for the market. We're not necessarily extreme with our standard deviations chart. We closed right down in the -2 standard deviation. When we've gone down too far too fast is when we get down into the -3 standard deviation. The Chaikin oscillator, which spent a lot of the week being positive, has now crossed below zero and is now negative. The money flow is below 50 and declining. That's negative. Ultimate oscillator below 50 and declining, negative. And for the second day now, we've had the dots on top with our parabolic SAR. That's, to me, this is an important signal, and this is switching things back more negative. We're also falling below this mini rainbow with our 20-period simple moving average of the open, high, low, and close. If we bounce back up, will one of these lines end up acting as resistance? And we're dropping down to this other green trend line here. And I kind of broke the rules a little bit with this trend line because it's supposed to be from low to low. Well, I wanted to make it parallel to this other trend line here. If we fall below this, I may end up either adjusting this trend line or actually drawing a different trend line that actually goes from one low price to another to see if that might offer some kind of support. Here's our longer term moving average study. We're with the 150, we're dropping below this level. And again, I put these lines on here. There's nothing magic about it. But when we get to this level, we just want to make note of that. And the special K, it's still trying to figure out what it wants to do. It's actually a little bit above the red line right now. Looking at Dow theory, we are declining with the Dow. The transports actually did a little bit better in Friday's session, where we're starting to see more weakness with the utilities. And the Zohorchak, this is a long-term buy or sell signal. After giving us a buy signal for most of 2023, it's now showing some weakness. And the S&P to utilities ratio, which had been going up nicely, which could give support to the S&P, it's now spent the last few days actually starting to come back down. We're also seeing the staples, which have been declining overall. They're starting to outperform the S&P, negating this positive backdrop that we've been seeing on this chart. And our 10-day average of the highs minus the lows for the for the S&P 500, after giving us an extreme negative, we were seeing some improvement, but now we're starting to fall back below 50. In our 19-day exponential moving average of the advanced decline ratio, we had been above zero based on price and volume. Now we're dropping below. That's turning things more negative again. The micro caps continue to set new 52-week lows pretty much every day over the last few days. The Heiken ASHI is negative. The KEGI is negative with a red line pointing down. The Renko has now switched over to being negative, and the 3-line break is also negative. The equal weight continues to really underperform the S&P. That's showing a broader range of declining prices. And looking at the ratio between the S&P and the equal weight S&P, this is still holding up. That means some of the big stocks are hanging in there better than the smaller stocks. The Dow continues to decline and still has a ways to go if it's going to come back down and test this previous low. And the diamonds still are negative. The NASDAQ 100 also coming down to the point of previous lows. Is this going to matter, or are we going to fall through this? Where the QQQs for the Elder Impulse system still remain negative with red bars. We're switching over to negative with our momentum. We had been positive with the PPO. Now it's crossing over its moving average and it's below zero. So that's turning things more negative. And we're also coming down to the 61.8% retracement level again with the NASDAQ 100. This level held up before. Is it going to hold again this time? And we're still looking more negative with the NASDAQ. We're kind of in free fall. We're coming down here to this previous low. Is that going to matter to the market? And we're dropping below the 50% retracement level for the fib levels on the NASDAQ. We're coming down to this previous low. Small caps just looking really bad right now. They've actually broken through support, and we're starting to get to the lower end of where we were at previously with the small caps. And the Russell starting to show more negativity as well. We're declining with the RSI and not necessarily extreme. Recent death cross starting to come down and possibly test this support. The bigger bunch of support in here, we've already broken below that, and we're turning negative with the MACD. We're also negative with the small cap measuring the Elder's Impulse system. The mid caps also breaking below support as well. Now, there's some other levels in here where we might find some support, but for right now, it's quite negative. And the Elder's Impulse system for the mid caps remains negative. The FANG index is still continuing to drop below its 50-day moving average, even though it's in a longer-term uptrend. And we're dropping below this arithmetic scale now that we've been above for quite a while, going back to 2009. Now we're starting to come down below it. Looking at growth versus value, we're hanging in there okay for right now, but we're showing some weakness when we look at the Qs to S&P. We're really seeing some weakness with discretionary to the S&P, and large cap growth is showing some weakness when compared to large cap value. So when we look at the growth to value ratios in the large caps, mid caps, and small caps, these are actually holding up a little bit better for right now. They may show some weakness later on, but for right now, they're still hanging in there. The 50-period exponential moving average of the new highs minus the new lows, it was starting to tick back up. Now it's starting to go down because for 2 days now, the black line, which is our indicator, was below zero. That's causing the red line, which is the 50-period moving average that we use in the previous chart. That's bringing it down instead of going back up. The 50-period moving average study, the S&P, after getting extreme negative, we were seeing some recovery out of that. Now we're starting to come back down. And when we look at the Amex, NASDAQ, and NYSE and take a 5-period moving average of the highs minus the lows, we're getting well below zero. That's broader range negative. The dollar was down a little bit in Friday's session, but it still continues to be in an overall uptrend. The financial sector, which was trying to regain its 200-day moving average, is now coming down to this previous low. Is this going to provide some support, or are we going to fall through that? Another few days, and we might see a death cross with this particular index. We're also keeping an eye on this support level. So far, here or around here has held. If we continue to fall, will this level hold again? And we're coming up, just starting into the new 50-day cycle where maybe it looks like we're going to be going down from here unless we find some pretty solid support. Where interest rates, they were up, and we got actually up to the 5% level, but then spent the rest of the day coming down, but that just didn't really help the stock market. So based on price, we're showing a little bit of an improvement with the RSI. We're still working off of a death cross based on price. The MACD is still negative as well. The 30 to the 5 still is back to looking more normal, and the 10 to the 5 is above zero and acting more normal. We're still seeing a pretty strong correlation when we take the 10-year and subtract the German 10-year. that continues to go up as interest rates overall have been going up. And the dollar, even though it was down in Friday's session, continues to go up. So we're seeing a pretty strong correlation between the two. And the longer this correlation is here, probably the more negative that is for the market. Tom Bowley, where we're kind of coming out of this positive time now. Boy, wasn't that fun. And we're coming into what historically has been more of a negative time. Before near the end of the month, we tend to see a positive time. So what's our outlook for Monday? We still have this UAW strike that's going on. They still haven't been able to find a new Speaker of the House, and that's turning into even a bigger mess than it already was. Israel, they're really worried about things that are going to escalate, that Hezbollah might come and become more involved. We've got a couple of U.S. aircraft carriers just kind of parked off the coast there. They're wondering how much Iran has, how much they're involved in this whole situation. And this thing could really escalate if things don't settle down pretty quick. Our technicals are now negative, and we're possibly at longer-term support. We won't get any economic reports on Monday, so we won't have that to key off of. The geopolitical events right now, it's all about Israel. Bear in mind that there's still a war going on between Russia and Ukraine. You might not have been hearing about it as much, but that's still happening too. And there's even the possibility at some point in the future, this is pure speculation on my part, that these could join up and actually become part of one bigger war. I hope I'm wrong on that, but you have to kind of leave your mind open for that. Here's the calendar for the upcoming week. We're not really going to get anything major. We'll get new home sales on Wednesday. Durable goods and GDP. Those are going to be the big reports on Thursday. And then we're going to get another inflation report on Friday with the PCE core. That's the one the Fed really pays attention to. And then looking at the Stock Traders Almanac statistics, we actually are pretty positive historically. We're neutral to positive with the Dow, where we're positive with the S&P and NASDAQ. But that's taking all of the years together, not pre-election years. And we will be in the week after options expiration, which tends to be more negative than positive. We will be on the 16th trading day of the month. We're in an election year. Yeah, we're kind of flat on that day. Where historically with the solid green line, we tend to be more positive. Now we're starting to wonder, looking at the S&P, are we coming into this top that we saw, and we're going to begin to see some weakness going from here? Also seeing that with the Carson research, as well as the NASDAQ and then the S&P during a pre-election year. Just wondering if it's playing out the way it has typically in the past. And we tend to be a little bit more up than down for the month of October for the S&P during a pre-election year when we go back to 1950. Now, we are seeing a little bit of a bounce with Bitcoin. I'm not sure if it's making those folks happy or not, but here's a chart where we actually were able to get back up into the 30s for a while. We closed below 30,000, but we are seeing a bit of improvement. However, the longer-term trend still remains negative. So our scenarios, if you're more aggressive, you're seeing the ADX cross above its moving average, you might go for a negative trend at that point. If you're more conservative, you probably want to wait. We just cannot justify the up scenario right now. We could still possibly justify the sideways trend because the ADX continues to be below 20, but it is getting stronger and a new trend could be developing, and that trend could be negative. The warning signs, our longer-term equity put call ratio is going up, and I had to move this all around here. The equity put call ratio is going up. The risk on posture is showing weakness. Our oscillators, this is another new addition. They are now turning negative. The vortex, that's another one I had to add. It's now negative. The 50-period new highs, new lows, exponential moving average steady is negative. It had been looking like it was improving. Now it's going back to looking more negative. The parabolic SAR, we saw this a couple of days ago where it has switched negative. The Russell, the small cap, and the mid caps are now working off of death crosses. Positive signs. We still don't really know about the long-term special K chart. It's right on top of its red line. The bullish percent index, it did generate a buy signal, but now it's showing weakness and starting to turn and go back down. The Copic curve, that's rolling over after generating a buy signal. The Pring bottom fisher, it's just happily going higher. And the small and mid-cap growth continues to be positive. That part has been hanging in there, both for the small, mid-caps, and the S&P. Growth is still holding up for right now. The financial sector continues to be below its 200-day simple moving average. Again, that could produce a death cross. So our conclusion, we're negative now. A new trend looks like it's developing and we're below longer-term support. In the short term, we're negative and we already have some oversold or extreme negative readings that still could go further from here. In the intermediate term, we are negative and we're losing support. Where in the long term, this has been a long time since I've had to change this. We are now negative because we're below the 200-day simple moving average. Now, we'll have to see how things play out. It doesn't mean that we're just going to turn and go the other way automatically. If we really start to break below that, that's really going to shift things a lot more negative. Thank you. I hope you have a nice weekend. I will be preparing the weekly video, the intermarket analysis video, and the deep dive video, so please look for those. I hope you have a really nice weekend, and I will talk to you in the next video.